Hi everybody, this is Osprey from MyChartCoach.com, and we're going to take a look at the marijuana sector in this video. Okay, so first up we're looking at ticker symbol MJ. This is the Alternative Harvest ETF, and as you could see here, it had a bad day on Friday. It closed down 8%. Notice our RSI now is below 70. Dropping below 70 was a sell signal. It has to get back above 70 to signal the bulls are back in control. Keep an eye on Fasto at 51 here. If it drops below 50, that's going to signal more downside risk. There was a bearish crossover on ADX. Notice how Plestii, the green line, crossed over ADX to the downside, the black line. On Friday, bearish one black crow reversal pattern formed. So we'll be looking for bearish reversal confirmation next week. Right now it's hitting EMA 8 at 39. That's the big level to hold. It was trading at 39.05 in after hours trading, so it was down 45 cents. If that level breaks, you're going to see a drop down to EMA at 13 at 37.74. And it possibly you could get a middle Bollinger Band at 36 support test similar to back here in September. As long as this dotted purple line holds, the 20-day simple moving average, the uptrend's intact. If it were to break, that would signal the possible start of a new downtrend. Okay, take a look at Horizon's Marijuana Life Science Index ETF, and so it's been on a very nice uptrend. You did get a drop down below 70 on RSI, below 80 on Fasto, bearish crossover on ADX, and so it's testing EMA 4 support here. There's no after-hours trading since this is an over-the-counter stock. Over-the-counter stocks do not trade after hours. Notice the F on the end of the ticker symbol. That stands for foreign. This is a foreign ticker symbol, Canadian. And so a drop below EMA 4 next week at 1918 is going to put EMA 8 at 1863 on deck. The thing to keep an eye on is this unfilled gap down here. And so a drop down here just below the middle Bollinger Band would fill the gap. That's at 1743. A bearish reversal pattern did form on Friday, bearish harami. Okay, so have to keep an eye out for a break below EMA 4 support and bearish reversal confirmation. Okay, let's take a look at Tilray here. Closed down 30% on Friday. So yeah, notice that when it topped out here, you had Fasto had broke above this green line. This is where it's peaked out in the past. So that was your clue. When you had this indecision candle, this black candle that formed above the upper Bollinger Band during an uptrend after a gap up open with Fasto at 90 or RSI up here at 90 and Fasto up here at up above the 80. Those were all signals to take it to the sidelines, downside risk, or if you like to, go short, that was the level to buy puts. And so puts have been returning nice gains on the pullback. As you could see here on Friday, you had some options contracts were up 600%, 500%. You can make money to the upside and you can make money to the downside. Now notice that these options that were out of the money here, the 100 strike and the 120 strike, since they were so far out of the money, you could see they almost went to nothing. And so keep that in mind with Friday expirations. Time decay is not your friend heading into that Friday expiration. Okay, so anyways, going back to the chart here, what happened is we had a drop on Friday below EMA's 4 and 8 support, and it was trying to hold EMA 13 at 124.40. That level did break, and then there was actually more downside risk in after hours trading. It was down to 112.50 in after hours trading. So that's putting it, that was a major red flag on Friday because it broke below EMA 4, this pink line, for the very first time since way down here at this red candle. You see how it had closed below. That close above on August 15th, it had not closed below EMA 4 until Friday. That was the signal that we've been looking for, signaling that the chart was indeed breaking down. Before then, it had been working its way back to EMA 4, and that level was holding when it got above the upper Bollinger Band. Every pullback, it would hold EMA 4. That pattern has changed. A new pattern has begun, and that is a bearish change in trend. It doesn't mean that it's completely over and that it's a piece of junk. This is a great company. It just got way overvalued, way ahead of itself. It filled a gap right here. And so the gap did fill on Friday. And so a downward gap fill is a potential setup for a technical bounce. The only problem is that was gap number 5. There's also unfilled gap number 4, unfilled gap number 3, unfilled gap number 2, and unfilled gap number 1 way down here near $30. So there was 5 unfilled gaps in this chart, and then it had that gap up open 7 here on Wednesday, and so it was just full of air. Air gets filled many times, and so yeah, now what you're looking at is a potential pullback to the middle Bollinger Band at 98. You know, in our chat we had discussed that was our downward target. So if you come to the chat, it's definitely well worth it. Okay, it pays to be in the chat. If it pulls back there and hits that middle Bollinger Band and it holds, that will be the reload level for a technical bounce. That level has to hold. If that level were to break, that would signal the possible start of a new downtrend. So there's a very good chance that Tilray will bounce off that 98 level next week for a technical bounce. So write that level down. Now check a look at Tilray implied volatility, and you can see here down here on August 6, it was down here. Where was it at? It was down here at 57. Okay, and so up here on the 19th, it hit all the way up near 300 at 298. It was insane implied volatility. Once it started dropping, that was your signal that the calls were done and that the puts were in play. So keep that in mind. If implied volatility is spiking, once it pulls back, that's when those calls start getting crushed, and that's when the puts start coming into play. So right now it's pulling back, and we'll have to see where it finds support. Just want to throw that out there for the options traders. If you look here at Tilray, the 15-minute chart, you can see here it formed a bear pennant here on the 20th. It came down, bounced, came up, it hit horizontal resistance, it failed to break, and that signaled more downside risk. The same thing happened on Friday. It came down, bounced, it failed to break horizontal resistance, and broke support. And so the close on Friday below this blue line, which is the 300 simple moving average at 125, signaled more downside risk. Okay, and so what happened now with that 112, what it's doing now is it's testing. So at 112.50 and after hours trading, look where that lines up perfectly. 112.40. That's was our next target down here at the 400 simple moving average, and so that's the last line of defense for the bulls. Okay, breaking the 300 simple moving average is a major red flag. It needs to get back above that level for the stock to become bullish again, and because bullish stocks, when they retrace, they bounce off of this level. Failing to hold that level signals more downside risk. So if it fails to hold that 112 level, look for that 98 to 100 level for a technical bounce. Okay, let's look at NBEV here. NBEV closed down 21% here on Friday. It did have the bearish reversal confirmation. So yeah, first up, I just wanted to show you this clean chart. You could see how it got really, it's become very parabolic here. Look at all the gap up opens. You know, there was 1, 2, 3, 4 gap ups in a row, and then you had another gap up, and then it pulled back. You know, if it wasn't for the bearish three gap ups reversal pattern, this would have formed bearish dark cloud cover. It's just all signals that the candles were working back into the bands. If you look here on Friday, the bearish 3 gap ups reversal pattern was confirmed. It had formed that pattern on Thursday. This is American Bulls. This is a good site for checking the candlestick patterns. As you can see, the 3 gap ups pattern, that pattern was confirmed on Friday with the red candle. Okay, and so if you look here at the more annotated chart that we've been working on, you could see up here it got above. It got really frothy on our side. You could see when it hit 90, that was a red flag, and now it's pulling back below the previous levels that it peaked out at on the last big run. And so now what you're looking for is this 70 level to hold. If it dropped below 70, that's going to signal downside risk. Fasto already broke below 80. You have plus DI hooking down. Right now the chart has the Eiffel Tower kind of look to it. Notice how it's very, very steep, kind of like Bitcoin when it got very parabolic. You know, it's unsustainable to have this type of trajectory. Okay, so it might have to pull back, take a little breather, and then possibly work higher, or it could, you know, continue to consolidate. Right now, the big thing is this gap between Wednesday and Thursday, and so a drop down to $5 would fill that gap. It closed at 6.15 on Friday, and then after hours trading, it closed at 5.86, so it was lower. It's going to be all about holding EMA 4 at 5.46. If you see that level break, look for a possible drop down to 5, and then you would want to see a technical bounce off of that level. Many times a pullback, you'll get a technical bounce off of a downward gap fill. But if it failed to hold, what you'd be looking for is a drop down to EMA 8 at 427. Okay, so yeah, so you got the bearish three gap downs. Take a look at NBEV here on the weekly chart. So it ended up closing below the May high close here. This was the key level to close above for the week. Notice how it hit above that level and then it pulled back. It's going to be all about closing above $6.75 to $7 for the week. If this level turns into resistance, the $6.75 to $7 level, that's going to signal downside risk. I had put out an alert there, check out the weekly chart. For InBev, this was what I was talking about. It was all about $7 for the week and it needed to stay above. Dropping below 7 was a signal to lock in those gains and head to the sidelines if you didn't exit at the 10 high or just below. Okay, so to the downside, if it does work its way down, what you're looking for is that 100-week moving average at 329 to hold. That's the big level to hold on a pullback. Okay, if you look here at the let's see, did I show, is this the one? No. Okay, yeah, it's going to come up on the next one, but this did have a big spike down and accumulation distribution as well. If you look here at the monthly chart for InBev, you could see here that for the month, what you want to see happen is a close above this high close from back in June of, what is this, June? Yeah, or May of 2017. And so that's just above $5, that 525 or so level. If it can make a new monthly high close for the month, that should signal that it wants to keep pushing higher. If it were to pull back below that level, that could signal a temporary top. So keep an eye on this 525 to $550 to $6 level, and then see if it can close above that for the month. Okay, and then one more to throw out at you for InBev. Look at the 15-minute chart. Check out how it was consolidating here sideways. It was trying to hold support. If it comes down here and breaks below this low close level and this 574 level during trading, what you're likely to see is a test of this 100 simple moving average at 517 and possibly this gap filling. A gap fill, which is just below $5, that could be the setup for a technical bounce, so keep an eye on that. If they fail to have it bounce at that level, you could see a possible drop down to the 200 simple moving average at 343. Okay, take a look at CGC here. Okay, so it's been consolidating sideways. Okay, so as you can see, there's been a little gap up, a little spike up, a little spike down, but really most of the trading has been in the sideways channel between 52 and 49. So it needs to break above this 52 resistance zone, and that would signal more upside potential. A close above 52 would be bullish if it could close above the top of this channel. Now, if it were to break below the bottom of the channel at 49, which is lined up with the middle Bollinger Band over here at 48.78, that would signal downside risk. You could possibly see a drop down to 44 to test the previous low close in September, or you could see it come down to that lower Bollinger Band at 42.59. The risk of breaking below the middle Bollinger Band is always a possible retest down to that 50-day simple moving average, which is currently at 36.72. It's going to be crucial that this 49 level holds for Canopy Growth for it to maintain this uptrend. It could start a new downtrend if it were to break. So next week, look for above 52 is bullish, possibly retest to the 57 high, that 56 something high there, or if it breaks below, you could see that 50-day simple moving average tested in the future. With the October legalization coming up, it's going to be really interesting to see what happens here. With Cronos Group here, it closed down 9%, and so it's in the bull zone still on RSI and Fasto, but you don't want to see both of those indicators drop below 50. As you can see here, it closed at 12.07 in after-hours trading, so it is below EMA 4, which is at 12.50. You wanted to see that level hold, and so if that level turns into resistance, it could pull back here and retrace to the middle Bollinger Band, which is currently at 11.43. That's going to be the big level to hold. See the dotted purple line here? It was clinging to that on the previous pullback. If that 11.43 level broke, that's when it could possibly pull back, test the lower levels. To the upside, what you want to see is a break above $13.75 to $14. If you can get a close above $13.75, that's going to signal more upside potential. In order for the uptrend to continue, it has to keep on making new high closes. Okay, let's look at IIPR here. Okay, this is the real estate investment marijuana company, and so it got above 70 on RSI. It's going to need to stay above that level. If it dropped back below 70, that could signal a temporary top, similar to back here when it got above 70 before. You could see that's where it had pullbacks. Okay, see where it's 70 right here. and see where that was the top and it pulled back. And so that's the setup you have right now, unless it can stay above that level. Okay, RSI or Fasto's above 80. What happened is it hit 49.50, the all-time high, and it pulled back on a multi-day run. As you can see, it's up 5 days in a row. So there was some profit taking at that level. The big level to hold now is going to be this closing price in the last trading day in August. It stay above 45.50 to make it a nice even number. If it can stay above that level, then it should keep pushing higher. If it dropped below, you could see EMA4 tested, possibly broken, and then back down to that middle Bollinger Band, similar to here. As long as that level holds, currently at 43, this uptrend is intact. The red flag would be if it couldn't stay above 45.50. Staying above 45.50 would signal that it wants to keep pushing higher. Notice the bullish crossovers on MACD. You know, many times that signals the start of the new push higher. Now, it is on a multi-day run, and many times when that happens, it does have to take a breather. And there was that upper wick there that showed people taking profits. If you look at the 15-minute chart for IIPR, you can see it peaked, and then you had what's called a climax spike. Notice the big volume bar there. People locked in gains, and then it consolidated sideways. It failed to break above 48.50, and then it pulled back. So keep an eye on 48.50. If that's resistance, that's going to signal more consolidation. If 48.50 turns into support, that's going to signal upside potential. To the downside, what you're looking at now is a possible drop down to the 50 simple moving average at 46.35. I guess I didn't write down the after hours trading for that one. If it comes down and hits that level and it holds, that's the reload level for a technical bounce. If that level broke, then you could see it come down here and test 45, or possibly come down and test the lower moving averages. Okay, let's look at IGC here. This is the one I wanted to show you with the dilution. You could see the big spike down on Friday. This is accumulation distribution. This is ticker symbol IGC. On a green day, when you have a big spike down like that, that signals the company was dumping shares. Notice shaken money flow. It was the smallest histogram bar for shaken money flow in quite some time. You can see since back here before the run, and so that was another red flag on a green day. Okay, it had recent MACD bull crosses, and that was a signal that a new uptrend could be starting. Okay, so also with the big spike down on accumulation distribution, you had the giant volume spike, and so that they used the run up to 410 here to dump some shares. Notice the long upper wick on Friday's candle, and so that's a signal of dilution of the company selling shares into the rally. And so yeah, just to give you a look here of the company up here, this is ticker symbol IGC, and it closed up 34%. So it had this huge day, but you had a giant spike down, accumulation distribution and shaken money flow, and so that's a red flag that they were you know, unloading some shares into the rally. That's what happens with penny stocks. They have to raise money. Yeah, for right now, the big thing is you know, you do have the 3 gap ups in a row. This does look like a bearish 3 gap ups reversal pattern to me. The pullback, if it did pull back down to EMA4 at 218, that would fill that gap. There is an unfilled gap between Thursday and Friday, and there's also an unfilled gap back down here between Tuesday and Wednesday, so keep that in mind as well. You know, if it came down here to around 145 or so, that would fill, you know, tested the middle Bollinger Band, that would fill that second gap, and that is the downside risk, is having those gaps fill. Now if it could stay above that right now it's at 278, you know, it needs to, you know, this week, the candle on Friday is floating above the upper Bollinger Band as well. I mean, many times when you have multiple gap up opens and then the candles floating above the upper Bollinger Band, the candles do work their way back into the band, similar to here where they work back in. It could get another push up higher, you never know, but if you look at the history of the stock down here, it got above the upper Bollinger Band, red candle, above the upper Bollinger Band, red candle, above the upper Bollinger Band, red candle. I mean, right here it pushed above, and then it had that big gap up open, and so that's what the bulls are hoping for. But odds are that you get the candles working back into the bands there. Okay, so check out the monthly chart for IGC. It got above the 100-month moving average at 188. That's going to be the big level to hold. If that level can hold, then it can break out higher for, you know, and keep this strong, you know, monthly uptrend chart going for the longer term investors. But if it fails to stay above that level, that would signal downside risk. You want to see it break above the 2013 high close, is where it's at right now, at right around 280 something, and then up here at $5 is a big level for the stock. That was the high close from back in 2012. Trading below 188 would signal more consolidation. Okay, let's look at ACBFF here. This is Aurora Cannabis. Okay, closed up 2%. It does have RSI up here at frothy levels. It's 71 right now, so look out for it dropping below 70. That would be a red flag. It had been peaking at the 70 level in the past. It had this one run where it busted above back in January, but other than that, it's been having a hard time staying above 70. Once it hits that level, it signals temporary top. Same thing with Fasto. Notice this red line here. Each one of these tops have hit the exact same level. What you do is you draw a horizontal line across the tops. Once you see Fasto hit that level, you know it's getting super frothy. Notice how it lined up with this red candle here. It pushed a little higher, but now the candles are working back into the bands. The bottom line is watch 883, that's EMA4. If that level were to break, that could signal downside risk. It does look like a bearish hear me reversal pattern. Notice the red candle inside the white candle during an uptrend. Okay, so you have to be on the lookout for a bearish reversal confirmation. A drop below EMA8, what you really want to see is this high close in June, which is between $7.50 and $8, around $7.75. Or maybe that is $7.75. Yeah, $7.75 and $8, this high close in June. You want to see that level hold and turn into support. You don't want to see it drop back below, or else it could start consolidating. If it could stay above 9, that would be best. That was the high close from back in March. And what we're looking for, if 9 can hold and it can stay above EMA4, is it working back up to 12, which was the high close from back in January. It looks like it's filling the jar. It was at 12, it came all the way down, and then now it's working its way back up. All right, that's what it looks like. And then, one more to leave you with. Check out XRP here. This is Ripple. So yeah, we had put out the alerts over here on the 18th when it came up here and it was hitting the 50-day simple moving average. And then notice how it's just been, it broke above and it's been running. And it's had a very nice multi-day run. Right now, it's all about the 200-day simple moving average. That's currently at 54 cents. If it could stay above this 53.95 level, then it should push higher. The big level to break, as you can see, is the blue line. That's the 300-day simple moving average at 73. I did put out alerts in the chat on Friday when this was running that was the lock-in gain zone. If it failed to break, that's the big level. If a stock is running, or a cryptocurrency or a commodity or a currency, whatever you are charting on a candlestick chart, if it runs up and it hits that 300-day simple moving average and trades above and then drops back below intraday, that's your signal to lock in gains. It has to close above. Once it breaks above that level, to signal it wants to head higher. If it fails to, that's the lock in gain zone. That gives you a chance for a trade. If you sold up here between 73 and 75, or even at 70, that gave you a chance to reload down here. I mean, look at the low. The low is down here. You could have loaded at 50 cents, 49 cents, and then boom, you're in the money. If you really like Ripple and you think it's heading higher, you could have had a nice reload. 50% lower from where you exited. The name of the game is trading. These are trading vehicles, everybody. Okay, thank you very much for watching this video. Come check out the chat. I'll post the link in the video below the video. Thank you.